Now that is the sound of a gauntlet being thrown down, a direct challenge from one of Hollywood's newest titans to one of its oldest giants. This isn't just some dry business proposal. No, this is a declaration of corporate war.
So you have to wonder, right? How did we even get here? How did Warner Bros., the studio behind Casablanca, Harry Potter, and Batman, find itself in a fight for its very future, caught between two of the biggest names in all of entertainment?
Okay, let's get into it. We are breaking down the hostile takeover attempt for Warner Bros. Discovery, and this is a battle that could completely reshape what we watch and how we watch it.
So let's start with the hostile takeover itself. The whole story just explodes on December 8th, 2025. That's the day Paramount Skydance, which had just finished its own massive merger, decided to completely bypass the Warner Bros. Boardroom and take an offer directly to its shareholders. A classic hostile takeover bid. Now, what does hostile actually mean here? Well, it means the Warner Brothers board had already shaken hands on a totally different deal. A massive acquisition by Netflix. But Paramount Skydance, they didn't care. They went right over the board's head, making a public appeal to the company's real owners, the shareholders, and basically said, hey, we've got a much better deal for you. But to really get why Warner Bros. Is so vulnerable in the first place, we have to talk about the debt that broke them. You see, this whole thing isn't just about ambition or some grand strategy. This entire saga is being driven by one thing, a crippling, unsustainable amount of debt. Warner Bros. Has this long and kind of turbulent history of gigantic mergers, from Time Inc. to the, infamous AOL deal, to its time being owned by AT&T. But the really critical moment was in 2022. That's when it was spun off and merged with Discovery. And that deal, while it combined some iconic content, also saddled the brand new company with a catastrophic amount of debt. Just take a second and look at that number. Over $33 billion. As of September 2025, that's what Warner Bros. Discovery was carrying in total debt. And believe me, that's not just a figure on a balance sheet. It's a giant anchor weighing down the entire company, dictating every single move they make. So what does a number like that actually mean in the real world? Well, it means their credit rating got downgraded to what's called non-investment grade, or, junk status. It means their interest coverage ratio is just 1 to 1. That means every single dollar of profit they make is immediately eaten up by just paying the interest on their loans. They have zero financial flexibility, no room for error, and really no choice but to sell. And this chart just brilliantly illustrates the scale of the problem. When you compare Warner's debt to Netflix, the company that wants to buy them, it's more than double. This is not a healthy company making some strategic move. This is a company in serious financial distress, being forced into a sale. And all that financial desperation, it created a massive opening for two titans to come to the table with two very different deals. These were two clashing philosophies for how to solve Warner's problem, and in the process, remake the entire industry. So Netflix's approach was basically surgical. They wanted the crown jewels, HBO, the Warner Bros. Studio, the whole DC universe. Their plan was to extract those super valuable assets and just leave the less desirable cable networks behind. Paramount Skydance, on the other hand, their plan was more like a total transplant. Buy the whole company, debt and all, and integrate everything. Okay, now this is where it gets really interesting. When you stack the two deals up against each other, Paramount Skydance is offering more money overall and a higher price per share. And, this is crucial, it's all cash, which means certainty for shareholders. The Netflix deal is a mix of cash and their own stock. But the most important difference, the real game changer, is that last line. The shareholder outcome. And here is the absolute kicker. Under the Netflix deal, Warner Brothers shareholders don't get a clean break. They get paid for the good stuff, the studio assets, but they are left holding the bag on a new separate company, basically the old cable networks like CNN and Discovery, that's still saddled with $20 to $30 billion of the original debt. Paramount's offer? It's simple, clean, and it's a cash buyout. So whichever one of these deals ends up succeeding, this whole battle marks the beginning of a new Hollywood order. You see, the so-called streaming wars are pretty much over. Now, the age of consolidation has begun, and it's forging a brand new media landscape. What we're witnessing here is the formation of a content oligopoly. It's a fancy term, but it means a market where just a handful of massive, all-powerful companies control pretty much everything we see, from the movie theater all the way down to our streaming queues. Now, as you can imagine, this level of consolidation raises huge red flags for regulators.
A Netflix Warner Brothers combo would control a staggering 43% of the global streaming market. That kind of dominance is going to face intense antitrust scrutiny in both the US and Europe, with critics worried it's going to lead to higher prices for you and a lot less bargaining power for writers, actors, and directors.
But the Paramount Skydance bid is no simpler. It's backed by this powerful and really politically connected group, including the Ellison family, yes, from Oracle, plus private equity firms and even major sovereign wealth funds. It just adds another layer of complexity to an already high-stakes game.
So, after all this talk about debt, takeovers, and stock prices, let's get to the bottom line. What does this $100 billion corporate fight actually mean for you, the person watching this stuff at home?
Well, it means the future of some of the world's most beloved franchises. I'm talking Harry Potter, Game of Thrones, the entire DC universe, is literally up in the air. It could determine whether you see the next big blockbuster in a real theater or just on your couch. And almost inevitably, it means that as competition shrinks, the prices for your streaming subscriptions are probably going to go up. Fewer studios could very well mean fewer choices for all of us.
And that brings us to the final question, doesn't it? As all the dust settles and these new media empires are built, who really comes out on top? Is it the corporations who are gaining unprecedented control of the market? Is it the creators who are trying to navigate this brand new landscape? Or is it us, the audience? That's the question that's going to define the entire next chapter of entertainment.